So don't think that's for Ben or me. I think that's directed towards Mr. Turner.
I'm sorry you feel like that, Rodrigo, but feel free to take that comment and stick it up your arse, old boy.
It just goes to show that people will find a reason to complain about anything.
you goddamn right. All right, everybody. So that will leave it for NFA Live. So everybody, there's much more to talk about today and complain about than Guy's British accent. Welcome. Welcome to Friday live stream here at Digital Asset News. Thanks for stopping by. We've got a ton of stuff to go over, so let's just jump right into it. First off, Jim Bianco. If you don't follow Jim Bianco, he is great. He really breaks things down in a macro sense. He takes a look at traditional markets, take a look at crypto markets. Really smart guy. I like what he puts out. Link in the description. You can check it out. And what he was talking about a couple of days ago, he was on Natalie Brunell's channel. And this was actually sent to me by a subscriber. Thank you guys so much. And it's a very good, nuanced conversation. It's about 49 minutes long, but there is a 1.5-minute piece I want to share with you about what he talks about as far as, and this is why I named the thumbnail on the title, which is traditional FI or TradFi trickery and what's going on. Because there's been this consensus that's been going on like, Rob, as far as this ETF flow, there's been so much. Why hasn't the Bitcoin price really jumped up? Well, first of all, it has. Now, as a reminder, I think we've tripled since the beginning of this year as far as the Bitcoin price. I want to say it was somewhere around 27, 28, correct me in the comment section, jumped it all the way to 73K, and now has settled around 63K or whatever it is today. I don't really check too much. But we can see that over time, as far as the ETF, we can see that there were some big jumps in the beginning from roughly February. This is when it had 62,000 Bitcoin circulating around for this ETF. And then within a very short amount of time in March, we had 201,000. The next big jump actually came from the beginning of March at around 160K and jumped all the way up to 260K Bitcoins in these ETFs. And that was in June. And now we're kind of struggling here, not struggling, but kind of going sideways. I think we topped out at 304,000 Bitcoin, and now we're at 295,000. So looking pretty good. A heck of a lot better than, of course, the Ethereum ETF. Here's the flow. And you can see because of Grayscale, they've just been outflowing quite a bit. And the net flows are negative 610 million. Now we can see over here, it's been positive the whole time, but that is just par for the course. So the question is why? Why, when we have such an inflow, what the heck is going on here? So this is a 1.5 minutes, and just take a listen to this. This starts about 25 minutes. So I want you to take a listen and kind of understand where things are going. Now, this is all on-chain data. So make sure you can actually hear this the correct way. Let me put on the tab. All right, take a listen.
Has there been no net new money into the ETH ETFs? And there's been $17 billion of net money into the Bitcoin ETFs. Let me break that down. 12 of that 17 billion came in by March, and 4 billion has come in over the last 4 months. 1 billion has come in over the last 3 months, and 1 billion is outflowed over the last month. So those flows have been slowing. And the answer that I've looked at with the data is that a lot of the flows that you see in the non-Grayscale ETF, because Grayscale has been getting nothing but outflows. Right. A lot of that money is going to the BlackRock ETF, the Fidelity ETF, the Bitwise ETF, and they're getting a lot of money from there. If you look at a lot of the on-chain analysis, where is most of the money coming from that's going into these funds? Most of the money. And it's really coming from on-chain. And if you want me to put it bluntly, it's somebody that owns Bitcoin in a Coinbase account. Oh, now I can buy the BlackRock ETF. So they sell their Bitcoin in their Coinbase account. They move it back to their E-Trade or their Robinhood account, and they buy IBIT. Well, that's not net new money into the space. It just moved from on-chain back into their TradFi account. That's the vast majority of the money. When you cut through it all, that $17 billion, how much of that money, when you talk about is move from Grayscale, move from on-chain into off-chain, how much of that money is actually new money? And I only think it's a couple of $1 billion.
So crazy right there, right? And we've been listening to this and talking about this. We're like, oh, it's, there's so much going on. And then there's a supply shock, and the supply shock's going to happen, and it's really going to take off. And you take a look at this and you hear it and you think to yourself, well, how bad can it get? And that's when we have to zoom out and just remember that we did a marvelous run in a very short amount of time. So as people are moving things around, I get it. And now, we can, and of course, I linked this entire conversation in the description, and it's great. There's great alpha being spewed here. I shouldn't say it like that, but really great information that's being put out, and great questions from Natalie. And then when Jim starts to talk more so about what's going on as far as traditional finance, he says what we've been talking about on this channel before, which is like when traditional finance gets in, you have to understand they have their trickery, they have the things that traditional finance do, which is they play both sides of the market. They'll short, they'll long, they'll use bots, they'll have trades, they'll do all these things that can really move and manipulate the price. And then watch this video because it's not all negative. Actually, Jim is extremely bullish on 2025. And he thinks that going into 2028, it's going to be even bigger. So take a listen to that. It's not all negative. But as a reminder, if we take a look at total liquidation charts, we can see that over the last, since March, like in 6 months ago. There's let's just take like this one day, the 4th of August, not too long ago. There's over $1 billion worth of shorts and longs getting wrecked. And there's been billions upon billions of dollars flowing in and out. And where do you think that comes from? It comes from these traditional finance folks who are getting into that. I'm not saying it's wrong. I'm just saying that's the nature of the beast. And then as a reminder, if you're thinking to yourself, well, why doesn't it just keep going up? Because, there's so much things going on. We just talked about that. But also remember, there's a lot of things going on in the background. There's margin trading. There's leverage being happening. It's not just, you're just doing spot. You could be doing 10, 25, 50x, a bunch of degens. People get liquidated, we just talked about. Then the price moves down. We have a herd mentality, thin order books, bot trading, which I think is going on a whole heck of a lot, slippage, arbitrage, and stop loss orders. So when we take a look and bring this all together, we can understand that we're in a different environment right now. It's going to take some time. I still believe we've got a way to go. I think things will start to really pop off around November. Going into December in 2025, we just have to get to this presidential election, and we'll see where we go. So just giving you some insight. Let me know what you think about that in the comments section. And speaking of elections and governments, Nick Carter. This was a great piece, and I linked the entire thing down in the description because, again, there's a lot of things that are going on. I try to bring you the best information I possibly can and bring you balance, because if I just give you Moon Boy stuff, you'll only think that we're going to keep going up, and that's not how it works. So Nick has been a big advocate or proponent and description of Operation Chokepoint 2.0. And what he says here really brings it home. And why I'm sending this to you or talking about this again is because people believe that government is irrelevant and Bitcoin and crypto do not need government and it's inevitable. And you're right, it's true. But I will tell you this, it can slow down the whole process a whole heck of a lot. And this is proof. So Nick talks about, hey, Operation Chokepoint 2.0, here's some examples and why things are different. He says the first casualty was Silvergate Bank. Remember that bank that dropped off the face of the planet? And then, of course, there was some high-ranking members like Crypto Karen, Elizabeth Warren, talked about how they should essentially do a run of the bank. That's Silvergate Bank. The common reporting around Silvergate was that they lent to crypto depositors. Those depositors were flighty. When rates rose, they suffered M2 losses on bond portfolios and insolvent, except that's not true. They weren't insolvent. Silvergate weathered the storm, even though short sellers and members of Congress like Crypto Karen encouraged a bank run based on rumors that Silvergate had criminal exposure to FTX. Why would she say that? It's because she's building an anti-crypto army. She's partially responsible for this. They suffered huge redemptions after FTX, but were still solvent, which is pretty amazing, and were able to do business. Imagine that. An American business is doing what it's supposed to do, weathers the storm, gets out because it's a free market, and gets screwed over by Congress. That's what happened. And to continue, get off my soapbox, and there was one problem. The Fed told them that they had to reduce their crypto exposure to only a nominal or ancillary part of the business. This is like telling Dunkin' Donuts that they can't sell donuts. Silvergate was a boutique crypto bank that served the crypto industry. So after the Fed came with this new informal guidance, their business ceased to exist. That is what it is. The bank's assets were also toxic, as it became clear with Silvergate B and Silvergate that any crypto-related lines of business would not be eligible to be sold according to the OCC. I broke the story here. One point I've endeavored to make is that Silvergate died by murder, not by suicide. In my original reporting, I thought this was the FDIC, but it's actually